My guest today is Roger Conrad, and we're talking about master limited partnerships in the energy sector. Hi, Roger, and thanks for being here.
Thank you.
So I understand the MLP sector is really growing a lot, especially in the energy. And of course, most of the MLPs are energy-oriented companies. So can you talk a little bit about that and what you see as the potential for this year?
Well, we've had a pretty good 4 years, and oftentimes that means that the next years, or you've come to the end of the road. I don't think that's the case with these. There have been a couple of big issues that have been overhanging them. One being energy prices, and even though a lot of even the pipeline companies have locked in revenue, they're not so much dependent on what happens with energy prices. They move around with energy prices, and ultimately the kind of projects they depend on producers being willing to drill, which of course depends on energy price. So that's been an issue. The taxation issue has been another thing, particularly with the budget crisis and the idea of perhaps some tax reform, and a lot of people have worried that MLPs might wind up being taxed. So we saw a lot of selling at the end of last year. Some of that's reversed, but I think the big driver going forward of this industry is going to be just a huge shortage of infrastructure in the United States, bring oil, gas, natural gas liquids to market from the well. And a lot of the energy that's been recently tapped into, the shale energy, not really in traditional areas where there is pipeline infrastructure. So a lot needs to be built. The volatile market for energy prices has kind of stretched out the period for building it. But as these companies build projects, as they and the U.S. is projected to be the highest producer of oil by 2020 by the Energy Information Administration. Even if it just goes part the way to there, there's going to have to be a lot of pipelines, a lot of processing, a lot of storage built. So that's really the opportunity, and the more these companies build things, the more cash flow rises, the more they can increase distributions, and that's the primary driver of the share prices. So I don't see any end to that dividend-paying machine.
Right, and they're great dividends. But what do you tell your subscribers in terms of how long to hold these MLPs? Because you run the risk with this recapture task, right? That can be pretty significant. I've read that some people say just look at them as a lifetime holding. What is your view on?
Well, I think that's probably a good way to look at it, provided the underlying business is still sound. I mean, a lot of people, I think it's a mistake to let the tax decision dictate buying or selling a stock, a good company. But for the most part, yes, I think, and if you look at our model portfolio and our MLP profits advisory, we pretty much have held most of the stocks since the beginning. We've added some along the way, but the idea is to buy and hold. And like you said, there are tax consequences, so that's another good reason to hold on. You can also at this point. There's a step up at the end of, or when you will these MLPs to your heirs, say that you hold them that long, then
it's a cost.
Yeah, exactly. So that's a cost. Yeah, so then they wouldn't pay a tax. Their cost basis would adjust.
Good advice. Thank you for joining me.
Hey, thank you.
And thanks for joining us at the MoneyShow.com video network.